Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what we can expect moving in for the rest of this weekend, maybe even the rest of this month. So as usual, if you enjoyed the video, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my YouTube membership section is live. If you're interested, the link is down below where you, for $2.99 a month, essentially enter it and I share all my intraday thoughts for Tesla as it's moving throughout the day, pretty much live, if you will. And yeah, and hopefully that maybe helps some of you. But if you're interested, the link is below. But I want to try speaking a little bit slower. I'll see some people making comments of me speaking too fast. But nonetheless, moving into a Tesla, closing the day down in the red, unfortunately, 1.23%, putting us at a little bit shy of $240 per share, which unfortunately also compared to the market is a pretty, I wouldn't say it's a severe underperformance, but it's definitely a pretty sizable underperformance, right? With QQQ, for instance, up almost 1.2%, even SPY up almost 0.6%. So again, with Tesla being pretty much in the red, not the best look, not the best look. Obviously, this is off of the news of Tesla reducing their, I believe, just the Model Y. It might have been the Model 3 as well, but from what I can remember, it was the Model Y prices in China, the long range, I believe it was in China, which naturally affects margins. And if margins are affected negatively, well, the market doesn't like that. And Tesla, of course, is going to fall in that. Now, there's a few important things to note that happened today. The first thing is on the daily, right? Two things really on the daily. The first of which is bullish, which is, of course, the gap fill, right? There's major gap fill. Now, granted, there's, of course, more gap fills below, down here, right here, right? There's a lot of gap fills, right? 192, I'll just say the levels, 192, pretty much 207 roughly. And then, of course, we have another one at pretty much 220. Right, but we did fill probably the biggest one, the one that everyone was eyeballing, and we finally filled it, which was today, right, at 235 roughly. We went slightly below it, but that usually happens. You usually overfill a gap. That's pretty common, right? But nonetheless, right, the point is we filled it, which is a good sign, and we bounced off of it, which is a good sign. That is a bullish sign. However, with that being said, it's pretty bearish, the fact that we went not only below 240, but more importantly, closed below 240. I talked about how on Friday's candle, how we went below 240, but we not only recaptured 240, but we entered 242, which was, I said on Friday, it wasn't a bad close, but it wasn't really a convincing close, right? The bulls really kind of dropped the ball near the end, is what I mentioned, and how it could still be anyone's game. Well, as you can see, this is why I say that, because it still was anyone's game. Clearly, the bears really took control today. But again, the fact that we went this far below 240, and I said also in Friday's video how if we do come to the gap fill, in theory, it should be a bullish bounce. But the issue is falling that low makes it that much harder to recapture these levels again. So in other words, the level of 240 to 242, kind of, that rough range, that, two price range, it was a support, a pretty good support, right? Over here, even over here, right before this drop, right? It was a pretty major support, especially with not a lot of volume rather underneath us, which you can see we're actually trading in between. And now we're coming up to this higher volume area and we're getting rejected, which is of course that 240 to 242, because as usual, when old support, it gets broken, it now becomes resistance and vice versa. And that's exactly what happened here. This 240 to 242 level that was support now is resistance, right? And it was okay here because the fall wasn't as substantial and there was a lot less room to recover faster. You know what I mean? There's less of a hill to climb to get back to that level. But unfortunately, when we go this low, like I said on Friday, the hill becomes much larger, right? It's a much larger climb now to get back above these crucial levels. In this case, again, 240, 242. And unfortunately today, we just couldn't do it, right? We came back up to 240, almost 241, and we closed just shy of 240, but we're just getting rejected and we're just not really finding a convincing close above it. So that's bearish. I don't like that. Now, a 65-minute chart, the thing that's potentially a little bit bullish on the 65-minute chart is the fact that we did actually re-enter this descending wedge. Descending wedges are usually, not always, of course, nothing is guaranteed in the market. Make sure you understand that. It's very important. But usually, right, percentage-wise, descending wedges are more often in favor of the bulls. They usually zigzag and break out to the north side. There's a little hair flying on. I have a very hairy cat. So anyway, right, and in this case, we actually broke to the bottom. But the good thing that I like is on the first 65-minute candle, or in other words, the 1-hour candle, which is one of my personal favorite time frames, we recaptured the wedge. We came back into it because what could have happened instead is we opened down here, right? We came all the way down to this level of 230. 233 even we just barely touched or entered. But what could have happened is we came down in the morning like we did, and then we could have went back up and actually came up to this kind of 237-ish level, which is essentially retesting the breakdown of this ascending wedge, and then essentially get rejected and continue our way back down to the 220s. That was a very real possibility, right? That absolutely could have happened. It didn't. And the fact that it didn't, and especially on top of that, we actually re-entered the wedge and arguably even retested the re-entry. As you can see, this candle re-entered, came back up, pretty much retested that dreaded 240 now, which is unfortunately resistance. And then we came down, got rejected, and we actually, you can see, kind of bounced right back off of it once again, which is a good sign, and then had a decent close, right? Again, not the best close, could be a little bit stronger, but an okay close, right? A close that gives some potential tomorrow to potentially, not only re-enter the 240s, but on top of that, if we actually do break above 242, which is the level I'm really eyeballing, it in theory should also break out of this descending wedge, which will be a bullish breakout. So keep that in mind, right? Those are important factors to understand. There's still a few bullish and bearish things that are in play that I just mentioned. So it's very important to kind of watch those situations or those levels and react accordingly. This isn't a situation, in my opinion, where it's going to be very easy to predict and take out a fortune ball and understand or guess what's going to happen next. You can, and I do have an idea, and I think it's still going to break out to the north side. But with that being said, it's more of a reactive play, in my opinion, and that's what I have been doing, right? Personally, for me, if you're curious, I did day trade today. I did buy shares almost near the bottom, somewhere around 234 or 5. I can't remember what it was, around 4 or 5. And then I sold them pretty much at 239, which was a great trade. And then I re-entered pretty much almost at 236 on the dot as it retested this right here. And I'm still holding, by the way. I didn't resell those shares. So I day traded, sold up here, bought back, and I'm still holding, right? I'm holding those same shares right now because I do think there is still potential, and I'm kind of okay with the close because on top of everything I just said, we're still playing out that bullish divergence over here. As the stock, of course, starting from here is making lower lows constantly, right? As it's essentially going to the bottom right, you can see the RSI on the 65-minute chart is essentially doing the opposite. It's going to the top right? It's making higher lows while we're making lower lows. That to me is, of course, a bullish divergence, and I like to see that. Again, it's on a shorter time frame, which means it won't be, even of course, if it plays out, it's not going to be some miraculous, crazy reversal on that thing. We're going to all-time highs. We'll have to, of course, take it level by level. But if it does break out, I think we'll get a bit of a bounce here, at least for the remainder of August, and then I think September will most likely be another painful month, in all honesty. September and of course October, right, which of course is not only Tesla's worst month but the market's worst month, and October unfortunately hasn't been very kind to Tesla historically as well. Now, with that being said, those are some bullish aspects I just talked about. However, even if we break out of this, obviously, of this descending wedge, which would be a bullish breakout, we still have a bunch of resistances above us, right? First and foremost, of course, to even break out, we have to break back into the 240s, the low 240s range that I discussed many times. But even if we were to do that, even if that happens, we still have, of course, the 250-ish level up here, which is a major level to break up above as well. And by that point, by the time it happens, most likely the 21 EMA will probably be pretty close to it as well, right? Right now it's at 255. It'll probably be close to 250 by the time that happens. That's going to be something we'll have to break above. And then, of course, we'll even have the 50-day moving average, which is sitting around 260. That will be another level we have to break above. So there's a lot of resistances to break above, assuming we get this bullish run. There's also, of course, 255. Then there's 260, right? Pretty much every $5 incremental level, there's a major resistance, as you can see if you look at the chart. I think it's pretty obvious, essentially where the white lines are roughly. So there's a lot of work to do, assuming this breaks out, which is why I'm not insanely confident, right? I do have some bullish positions, but I have hedged shares with sold calls. I do have one sold put as well, which is a bullish position. I did buy some shares this morning on the dump, right, with the day trade I talked about. And I still have some cash left over to buy more if we continue dumping to my overall price target, which of course is going to be around 220-ish, potentially even as low as the 210s, right? I have cash ready to buy that as well. So I'm ready for any situation that plays out. And that's the way I like to position myself personally. So no matter what happens next, I'll view it as an overall win, right? One of them maybe be a short-term pain into a longer-term win. One of them will be potentially a shorter-term win. And then, of course, I think we'll fall. And then I'll obviously rebuy that dip as well. So that's the main thing I'm looking at, right? But going back to the daily as well, you can see the MACD still not looking too great. The RSI still not looking too great overall. The trend still doesn't look super bullish overall in a slightly longer time frame. The 65-minute has potential for a short-term bounce, but overall the trajectory doesn't look all that great. And especially if we don't recapture 240, ideally tomorrow, I think we'll have definitely more pain ahead of us. And I think we'll finally revisit the 220s because again, looking back to the weekly, right, you can see, we are of course in this channel over here and we're not too far off rather from the bottom of this channel once again, which I think is a very likely possibility, right? Which will pretty much put us around 215 roughly, which will also be a retest of the blue line that we did break out all the way over here several weeks ago, which we haven't retested yet on the breakouts. So keep that in mind, right? But ultimately, I do think that the weekly RSI looks pretty okay, right? It's not that, it's actually arguably more bullish than bearish. And I think the longer time frame is looking a little bit better, but I do think that in the next few months, there is potential for pain. The MACD is starting to cross rather a little bit bearish, which will give us a bit of that, several months of potential pain. But I think towards the year end is where things will start getting a lot more bullish. And I think that's where Tesla will have a nice run up towards the year end. So starting around maybe November. But that's the main thing I am personally looking at, right? But going back to the weekly, of course, we have the squeeze, right? The squeeze is not really telling us too much. It's potentially signaling a potential bottomy-ish situation. As you can see, the candles aren't getting any longer. They're actually starting to get shorter, which is a good sign, right? So we're going to go ahead and put that away for now. Let's take a look at options very quickly. Actually, before we do options, I want to take a look at the order blocks, right? On the order blocks on the 65-minute chart, you can see nothing really too crazy below us, unfortunately, which is disappointing to see, but we have sell order blocks starting around the 260s. So keep that in mind as well. And then the last thing I want to look at was on the weekly time frame, this pivot, right? So the pivot usually tells us, like I said, on the weekly, especially tops and bottoms, right? So over here, it determined a top signal, right? Which the red candle, the line rather, you can see got very large, and it was also a hollow behind it. That's like, like be careful kind of situation. And of course, on the flip side, if it goes lower and lower, and especially if it creates the same thing, but on the flip side, right, all the way down here, like it did over here, that's kind of like a potential, hey, this might be close or the bottom. So, take that as you will. Right now, it is, of course, trending to the bottom side, and it's looking, arguably not too bad right now. It's looking like it's a potentially slowly buy the dip situation with potential to go further down. But this is a situation where I personally don't know where the bottom will be. I don't know if this is the bottom. I don't know for sure if it'll be 220 or it'll be 210, right? I don't know which one will be the bottom, but I do know that, at least I'm confident, one of them will be the bottom, and we will get a very beautiful bounce off of one of those levels, which is why I'm personally just buying at these major levels personally, right? That's just the way I like to do it, right? No reason to guess and no reason to try and time the bottom and act like you're the best trader in the entire world. That's just ego, right? And there's no place for ego in the market. But that's overall what I am seeing and what I am expecting. So let me know what you think down below. Thank you so much for watching, and I'll see you tomorrow. Peace.